G'day folks, Jim here from Orchard Forex. It is Sunday the 12th of July. Well, we live in interesting times. The FX market remains pretty choppy and without much direction as the pandemic actually seems to be getting worse rather than improving, and leaving traders confused as to what to do next and which currency is probably the best sell, I guess. As can be seen from the trends table here, if we look at this, there's an awful lot of blue as far as the currency markets go. The dollar index is pretty much all blue, leaving us in a fairly neutral state of affairs. We're going to have a look at the charts in a minute, but there's not an awful lot of inspiration coming from the foreign exchange markets. There are some big items on the economic agenda this week though, and they may provide a little bit more clarity, and we'll go over those in a second. Much of the interest though lies in the stock markets, of course, which have been highly volatile, although they've been without much directional bias over the last week, generally underpinned by central bank activity, while at the same time traders remain very cautious about being caught long the stock indices, given the current state of the global economy and the possibility of another collapse in the markets. The real interest to me though lies in the commodity markets at the moment, where some safe haven demand is keeping the precious metals well underpinned, but also the base metals are reaching levels. Some of the base metals are reaching levels that we haven't seen for quite a long time, and we'll go and have a look at those charts as well in a second. As for while we're here on the trend table, the precious metals do actually look a little bit heavy in the short term, but still seem to be a buy on dips. The Kiwi looks pretty good too. That may have broken a long-term downtrend line. The short-term charts are turning a little bit lower perhaps, but again a buy on dips I think. And the crosses, well, I mentioned sterling Aussie last week. That's a big figure or two higher at the moment, and I still kind of like it. It is pointing higher, but elsewhere there's a lot of blue, as you can see. Euro sterling, it looks to me as though sterling might have a bit of strength ahead of it, not an awful lot, but it's worth keeping an eye on. The other interesting thing is Aussie Kiwi, with the state of play in Victoria and the pandemic numbers increasing. The Aussie's under a bit of pressure, and it looks to me as though Aussie Kiwi can head a little bit lower this week. But elsewhere, there's not an awful lot going on. Dollar yen dollar yen had a bit of a sell-off on Friday, and but it's largely range bound. The ASX looks okay in the short term and may have more upside in it, but once again with the pandemic and the current state of play in Victoria and potentially New South Wales, I don't think the Aussie the stock markets are going to climb too high. We'll go forward and have a look at the charts. Okay, here we are. I'm not going to spend too much time on the euro. It is chopping around in this sort of 112.5 to sort of 113.5 range. Has been for quite some time now. The 4-hour chart's not showing us much inspiration, and the dailies are flattening out. So for the time being, at least until later in the week, the ECB meet on Thursday, and then there's an emergency EU leaders summit on Friday. So we'll go and have a look at that in a second. But until then, I can just see things continuing much as they are, using so 113 as a pivot. The Aussie, I'll just go quickly have a look at that. It's doing much the same sort of thing. That's a 4-hour chart heading sideways. We might be building a bit of a triangle here, but it's really it's trading around just below 70 cents, and the 4-hour charts once again are flat, and the dailies are really not showing us much either. The Kiwi is slightly more interesting. This is a weekly chart, as you can see, maybe breaking above this long-term trend line, which goes back to 2014. So keep an eye on the Kiwi. I think I'd probably rather be short Aussie long Kiwi than long Kiwi against the US dollar. If the US dollar is doing nothing and continues to chop around, then the Kiwi's not going to make too much headway on its own. But it may be worth buying some here. I wouldn't be too long. 65.70. I'd have a stop loss under 65 cents certainly, and the upside The major upside resistance comes at this 61.8 level. That's not till sort of 67.5 cents or so. And we got the 200 week moving average ahead of that. And also we've got this high here. Well, that's about the same level, 67.5. But for the time being, that's possibly going to chop around. The dailies are not showing us an awful lot, maybe heading a little bit higher, but it's just worth keeping an eye on anyway. Moving forward to the stock markets. Okay, so here we are in the stock markets now. The really interesting moves, really, this last week been seen in the Chinese market. Now, this is the China 50. We're going to have a look at the Shanghai composite in a minute, which is pretty much the same kind of chart, but this has seen a 20% plus rise since the 1st of July, and is completely out of line with the other major markets. As you can see, the weeklies are pointing higher, and it doesn't look as though this move may be done with yet. This is having an impact on commodity prices as well, which we'll go and also have a look at. Getting back nearer home though to the S&P, that's really just jittering around in this, and I mentioned it before, sort of 3180, sitting above this rising trend line, but capped here at 3180. We did see a move back to the top side on Friday. The 4-hour charts are really not telling us an awful lot at the beginning of the week, and the dailies equally maybe pointing a little bit higher, but it doesn't seem to me as though we're going to find too much directional from here. So I would continue to just trade the range myself. I think so 3,200 on the top side. If we take out 3,200, we'll probably trigger some stops, but that might take us up to sort of these highs back here, sort of 3,250. But overall, I think I'll be looking to trade that range, 3,250, and buy it back down here into weakness towards 3,100, and just continue trading that range for now. The same applies to, I said just now that the Aussie market looks a little bit better. The Aussie market did have a bit of a squeeze up on Friday. This is a daily chart here. Let's go and have a look at the 4 hours. It had a little bit of a squeeze up, but it's not doing a great deal. I think we can possibly see another test of 6,000, and beyond there we're going to find sellers at this sort of 60.5 and sort of 60.80. I'd be surprised to see us above there early in the week, but on the downside 58.50 I think will probably hold it. So once again I'd be trading that range, sort of 58.5 on the downside, sort of 60, 50, 60, 80 on the top side. We're going to have a look at that Chinese, the Shanghai composite. Okay, I've got all the data here. Well, we can go back as far as we want, but that's the move we saw last week, and it does look as though this is a weekly chart. It looks as though the weeklies are beginning to point higher, and this FIBO resistance will be the first port of call at 34.80, and then these highs up around here, not till about 36.50. That's a weekly chart. The monthlies are also looking as though they might be pointing higher. So I think that's worth keeping an eye on, and I think if this does remain the case, that's going to have a major impact in commodities markets as well. So while we're here, I'll just have a look at the copper market. Okay, so here we have a weekly copper futures chart, and as you can see, we've had this staggering rally from March all the way back up to here where we are now, and we're currently sitting at levels that haven't been seen since April 2019. The indicators look positive to me too as well. So this line here is very important. There we are. So going right the way back to January 2011. If we take out this trend line, then I think we can earn maybe this high here. I think we're probably, if we take out 3, then I think we're really going to start motoring. We have to wait and see on that one. But the monthly charts are also turning higher. So keep an eye on that. It looks to me as though this has got more upside into it. What else can we have a look at? Okay, this is a weekly chart of the CRB, the Core Commodity Index, and that also looks as though it's pointing higher, which kind of underpins my view on copper heading higher. So if we can take out this sort of 143, 150 area, then it wouldn't surprise me to sort of head back up here towards the 170 area now. Although we're not trading this, it's just as a general view as to the direction of commodity prices. Now, while the commodity prices do look as though they're headed higher, this kind of goes directly against what's going on in the real world, where if the pandemic continues, we're going to see a huge fall in demand. So I've really got no major reason to see why the commodities should head higher, except for maybe they're repricing themselves for a weaker US dollar down the track. So it's something to keep an eye on. We're going back and have a look at some of the more tradable metals. So here we have a weekly chart of gold, which traded up to 1815 on Friday, and it took out these previous highs here at 1802. It has closed just below 1800, but the 4-hour charts, they're pointing a little bit lower, if anything, so I think we might consolidate around here for a while. The dailies, although we have got this bearish divergence, I kind of think we've probably got more upside here. They're not really showing any signs of turning lower at this stage. So if we can take out 1815, then I do think we can carry on to the higher levels, and there really isn't an awful lot of resistance, as you can see, ahead of this 1900 area. So that's some way off at the moment. And as I said before, it's going to be a choppy ride, and I think leaving in orders just to buy at $20–30 below the market, because I guess the market probably is getting itself long now. So we are going to see the odd clean out, but looking to buy dips with a view to heading back up towards the 2010, 2011 highs. Silver is not doing quite as much, although it is trying to break higher, and I think we aren't at recent highs though. This is September 2019, 19.5 now. We've got some way to go before we get there. I do think though that silver, it doesn't look too bad. It might be trying to build some upside momentum. The weeklies are also trying to push a little bit higher. It's a bit of a messy chart, but if we can take out this kind of level here, let's blow that up. We might, if we can take out this sort of 1950-60 area, then I think we can, it'll take a while to get there, but we can head to 20 and potentially back even to the 2016 high, just above $21 an ounce. Oil, I'll have a quick look at oil, which isn't doing an awful lot at the moment, but it remains interesting. As I've said many times before, we're sitting below this, the red line is the resistance area that's been in place quite some time now. We're struggling to get above there, but it traded up to 40.5 on Friday. It might, 40.75 looks to have been the high. So I suspect we're probably in for more of the same. As long as commodity prices remain underpinned, then I think we can head higher. If if stock markets do take a major turn lower though, I would be keeping some stop losses pretty tightly in place. Well, this is at 38.5. I'd probably keep a stop loss now in place below sort of 39.5, because I think if we go back down there, we probably are going to revisit 38 to sort of 30, 37, or down to these levels here. But anyway, that's about it for now. I'll just have a look at the calendar. Okay, here we are. There's, as you can see, there's pretty much not an awful lot going on today as far as the economic calendar goes. Bank of England Governor Bailey will be speaking later on, so we might see some movement in cable. Tuesday as well, the Chinese trade balance may create a few waves. The UK monthly GDP and German CPI. We got the ZEW, and then later on we've got the US inflation, which is going to be pretty benign. Then Wednesday we got the BOJ. They're not going to change rates, but the statement might create some activity. UK CPI, and then we got the Bank of Canada have got an interest rate decision as well. And then Thursday will be the big day really. We've got to start off with unemployment, and the Chinese Q2 GDP. And then moving into the ECB interest rate decision. Once again, no changes expected, but be interesting to see what Christine Lagarde has to say with looking forward. And then Friday, we've got this EU leaders special summit, and that we have to watch out for any headlines there coming either in relation to the pandemic or potentially some Brexit headlines as well. So that's about what we need to look out for there. And then later in the day, we've got the US consumer sentiment index, which occasionally causes a bit of volatility late in the day in the States. So that's about it for this week. Have a good one and talk to you next week. Cheers.